When you think of GameStop, you probably picture that store in the mall, right? The place famous for the whole meme stock explosion. But what if I told you that the real story of GameStop today has almost nothing to do with selling video games anymore? We're going to break down how this company is trying to pull off one of the most radical pivots you'll ever see.
And this quote, man, it just nails it. It captures the entire story in one sentence. The most important words there are specialized investment vehicle. It means we've got to stop thinking of GameStop as a retailer and start seeing it for what it's become, a company whose main business is investing its massive pile of cash.
It's a fair question, isn't it? How does a company that sells controllers and used games suddenly become an investment vehicle? Well, it all boils down to a couple of key pillars that completely change what the company is all about.
So let's really dig into this new thesis. We're shifting our whole mindset from GameStop, the struggling retailer, to GameStop, the cash-rich holding company. The product they're selling you isn't a video game anymore. The real product is how they use their money. And that brings us to the first, and honestly the most important piece of this whole puzzle, a foundation. And this foundation is a financial fortress built on a staggering amount of cash. There it is, $8.8 billion in cash and assets they can sell in a heartbeat. To give you some perspective, that is an absolutely insane war chest. More cash than a lot of companies 10 times its size. It completely changes the game.
So what can you do with all that cash? Well, for starters, it creates a serious safety net. A huge chunk of the stock's price is just backed by cold, hard cash. Second, it gives them incredible power to go out and buy other companies or scoop up assets for cheap. But get this is the crazy part. They could literally earn more money just from the interest on this cash pile than from their entire retail business. Think about that. Their side hustle could eclipse their main business.
Okay, so if the cash is the foundation, who's driving this thing? Well, that would be the CEO, Ryan Cohen. And his motivation is tied to one of the most unique all-or-nothing compensation deals you will ever see for a public company.
Just look at this. He takes zero salary, zero bonus. Nothing is guaranteed. His entire potential payday, the whole shebang, only kicks in if he can grow the company's value by 10 times. It's the definition of a massive bet where he only wins if the shareholders win first, and win really, really big.
We're not talking about small goals here. He has to clear two enormous hurdles. First, he has to take the company's total value, its market cap, all the way up to $100 billion. And on top of that, he has to generate $10 billion in total profit over time. These are absolute moonshots.
So the big takeaway here is simple. The CEO's financial success is directly, and I mean directly, tied to the success of every other investor. He only gets rich if they get much, much richer first. You just don't see this kind of alignment. It's incredibly rare.
Okay, so we've got the cash fortress and the hyper-motivated CEO. So let's talk about the strategy. How is this pivot actually happening? What are they doing with all that money and motivation?
This slide lays out the game plan. First, they've officially given the CEO the green light to invest the company's cash directly in the stock market, just buying other stocks. Second, they're treating Bitcoin almost like digital gold, holding thousands of them as a long-term asset. And finally, the stores themselves are changing, shifting away from low-profit video games and toward high-profit collectibles like rare trading cards.
And while they're investing in these new areas, they have been absolutely ruthless about cutting costs in the old business. You can see it right here. Their overhead, the behind-the-scenes costs, have been slashed by nearly half since 2021. This financial discipline is exactly how they've managed to stay profitable, even as game sales decline. This brings up a really critical concept you have to understand to get the risks here. The old-school retail business is what's known as a melting ice cube. It's a business that's slowly but surely shrinking as the world goes digital. So the race is on to use the cash flowing from that melting ice cube to build something new and profitable before the old business disappears completely. Which is the perfect transition to our final section. Because for all the opportunity here, it is absolutely essential to have a reality check and understand the very real risks that come with a strategy this audacious.
So here you have it, the two sides of the coin. The bull case, the argument for GameStop, is crystal clear. You've got that fortress of cash and a CEO who is completely all in. But the bear case, the argument against it, is just as strong. The entire strategy hinges on one person's investment skill. The core retail business is still shrinking. And, of course, the stock price can be incredibly volatile for reasons that have nothing to do with the business itself.
So what's the bottom line here? After looking at everything, the cash, the CEO, the strategy, it's this.
Investing in GameStop today isn't a bet on the future of video games. It's a bet on one person's ability to be an elite investor, to turn an $8.8 billion pile of cash into a $100 billion empire.
Which leaves us with the one final massive question. Are we watching the birth of the next great investment powerhouse, a Berkshire Hathaway for a new generation? Or is this simply the market's biggest and boldest gamble? Only time is going to tell.